Cash flow is another one I mentioned. When we have a look at these people, they've got some major cash flow issues coming up. So what are they? We've named some of them. New staff for EventMate. They're going to be starting a new business with no income but with staff. So they're obviously going to have wages for a period of time until they generate enough income to start covering those. Secondly, they've got an office in Queensland that's going to be running this show. Again, you've got that rent before any income starts coming in. Angela's living in Queensland. There's some extra expenses in regard to that. Plus they've got their existing ongoing. One of the things I probably didn't mention was they had 17 staff in their existing business. So there's a lot of cash flow required to run that business. What can we look at? What do they need to look at in regard to this? Well, the first thing I'll mention is cash flow is king. Cash flow is one of the most important aspects of any business. I'll prove it to you. CCH, the legal publishers, did a survey and found that of the SMEs or small and medium enterprises that have failed, 61% of them blamed cash flow as their reason for failure. In March, Dun & Bradstreet did a business survey and reported that 75% of businesses were saying they had financial cash flow concerns. NAB did a report and found out that 92% of SME owners stress about cash as their main stress in their business. The same NAB report said that 80% of that affects their home life. And I can tell you from seeing people in business that are struggling cash-wise, it really does affect home life. And 52% of them have taken a pay cut to continue to fund the business. And another report was done by CCH, which was a report where they interviewed accountants. Sorry, this was the same one that they were doing when they interviewed the failed businesses. 70% of failed SMEs had trusted their gut instinct instead of professional advice. And we see it time and time again, the number of people that we have that walk in the door and said, I've just started a business, I just bought a business, I need an accountant. So they go on their gut feeling first, and then go to their financial advisor, their accountant, whoever. And then when they don't get the right advice that agrees with their own opinion, they go somewhere else anyway.
Sorry, Wayne, are you saying that possibly people should see an accountant or a financial advisor before they actually buy a business?
Absolutely. Does any of this ring true with any of your businesses about cash flow? Has anyone known of anyone that's had a problem with a business that has really struggled for cash flow and failed? Because we do see it. We see people struggle from a cash flow point of view. So what causes these cash flow issues? Can people start thinking about some what issues are caused by that cause cash flow? Yes.
Poor prediction?
Poor predictions, yes. A poor business plan, if you like.
Maybe billing cycles and terms.
Billing cycles. So in terms of collecting your debtors, or business cycles, that sometimes it takes a long time before you get started, before you start getting that income in, or it may be because there are different cycles. And remember, this new business is aiming at the tourist market, so it may be dictated by tourism times, for example. What else might there be?
Slow payment.
Slow payment by debtors, yes, by people who owe them the money.
It might be the start-up phase of the business when you're paying your insurance and your regulations, meeting all your regulation needs as well.
So let's go through a few of those we've mentioned. So start-up phase, business cycles is what we mentioned. I have two examples that I know of businesses that fit either of those ones. One was an agency that was supplying staff, and a number or a large proportion of their clients was actually government-based organisations. They were paying the staff fortnightly, which obviously was going to be their major expense, because that's what they were doing. They were supplying staff. They were being paid fortnightly. They were getting paid every 2 months. So you can imagine the stress on cash in that situation. In the startup phase, they had real problems, and it took them a long time to get over that issue because they didn't have enough capital behind them when they started. Business cycle. Had a friend's son buy a restaurant down the coast. Bought it in November. By the end of February, he was going, wow, this business is absolutely fantastic, spent all his cash, got the window, no one was walking in the door. Still had the rent to pay, still had staff members to pay. So there where you get some issues because, as you said, the predictions are not right or they haven't understood the cycle, the cash cycle of their business.
So are you talking about the overheads in the business?
Yes, yeah. I mean, you've still got to be able to look at your overheads and pay your overheads even though the money may not be coming in the door. If you sign a 5-year lease, you've got to pay that rent whether you've got a business there or not. So growth is another one. Actually, you think, well, if a business is really growing fast, surely there's no problem there. But it can be. We had a guy came in and talked to us who had started a new business and it was growing leaps and bounds, but it was a business where he had to buy a product to sell the product. And because he was growing so fast, he was having to buy way more product than he was getting the money coming in from the sale of the other one. For example, in 1 month he may have sold 10,000, the next month he might have sold $20,000 worth. By the time the 10,000 had come in, he was having to buy the 20,000 for the next one, so he was always short. And it was snowballing because he was growing. Debtors, that was one that was mentioned. If you don't collect the money from the people who owe you the money, then that's going to cause a cash flow problem. I had a client in a couple of days ago, came in and said, I've got cash flow problems, I can't pay my tax bill. So we sat down and started looking at it. He had bills that were 2 years outstanding and he never chased those people for their money. Now, most of those people I know will pay the money. It's just somewhere else because they hadn't been chased, they didn't bother. They don't care if they pay you or not, but he should. But the other thing we found out was there were 2 years worth of bills that he hadn't billed. So obviously there's going to cause cash flow problems. If people owe you money, you need to manage that properly. Poor business model. We had another example. A guy left his employer who was selling specialist items. Left his employer and said, I can do better than this guy. He doesn't run the business very well. He was in a specialised market, he was selling the same product, had the same customers. The only way he could think that he could get those customers across was to slash the price. So he went into business, he was winning customers easily on price, but after 6 months, he didn't have any cash left. Why didn't he have any cash left? Because the profit he was making on the sale of those weren't even covering his expenses. It was a poor business model, and that happens quite frequently. Tax is another issue, especially when you've got cycles of tax. I had a new client come in the other day, just done his first 12 months, well, last year was his first 12 months of being in business, did really well. However, because he's lodging his tax return now, he's got to not only pay last year's tax, but he's also got to prepay this year's tax. So he gets a double whammy now for last year and this year tax. Fortunately, we warned him and he was able to, he'd already had the money set aside. But there'd be a lot of businesses who don't understand that and end up with this big double whammy at one point in time where they just are not expecting it and can cause cash flow problems. Cash purchasing of equipment. I'm not saying that's bad, but it's bad when you're using your cash flow to do that. I've seen times where people have built up a bit of cash in the business. Oh, I need a new ute, go and buy a new ute for cash, then come in 2 weeks later and said, I've got no money to pay the tax bill. So it has to be taken into account in regard to the overall cash. So what things should the vans consider? Well, a budget would be one thing. Knowing your break-even point is another thing. What Can anyone suggest what a break-even point might be? A definition of what is a break-even point?
The money you're bringing in matches the equals out the costs, the money going in.
Exactly. So it's when your revenue equals your expenses. That's a break-even point. Now, why would you want to know that?
So you know where your point of profit is.
Yeah. So you know what your point of profit is. When I had a guy come in who bought, or set up this bar. It was a very exclusive type of bar, and so he'd only got small premises because he just wanted an exclusive type of clientele. It was working brilliantly on Fridays and Saturdays, but the rest of the week it wasn't. What he hadn't worked out was his break-even point. And so he didn't realise that what he was getting on those busy days weren't covering the expenses for the whole time. It was good for those 2 days, but it wasn't good for the whole thing. He didn't know how much he needed to sell, what his break-even point was, so that he could work out how many customers he needed to get through the door. By not doing that, the premises were too small. He couldn't actually get enough people in to actually get to his break-even point. Cash flow forecast, I mentioned, if you go to the bank with a business, they generally want to do cash flow forecasts, very good things to have to try and predict into the future what your cash requirements are going to be. Keep on top of debtors, we've mentioned. Know your figures. What figures would I be talking about here?
Costing of your products.
Costing of your products. What else?
What your overheads are.
What your overheads are. Okay, so they're the normal things you would think of. Annual sales, what your sales figures are, your cost of goods sold, what your goods are costing you, your expenses, and your net profit. That's what most people think about when they think about figures. However, there's more to it than that. Where does the annual sales figures come from? Well, they come from the total number of customers you've got, times by the number of times they come into your business and buy from you, times by the amount that they spend. In this case, we just call it the average transaction. Those 3 things times together give you your annual sales. And what we find in a lot of businesses, and this is something that a vendor are going to really need to know, is their figures to be able to know whether this business is successful or not. You've got to be able to measure those figures.
So Wayne,
Yes.
because they've almost got 2 business arms, they've got the one in Canberra that's dealing with the government, and then they've got the one starting out in Queensland. How do they put the 2 together? Should they be treating them as separate?
They would treat, for this analysis, they would treat them as separately. The clients are not going to be that large in number in this for the IT business, but the transactions per year and the amount spent are going to be the larger numbers in that case. For the other one, it's going to be the other way around. They'll need a large amount of numbers of people to get that annual sales up. So to understand the relationship between the total number of customers, how much they spend, how many times they come back into your business is an important thing for them to know. But it doesn't end there. What about total customers? What figures do we need to know about that? Can anyone guess?
It's the life cycle of the customer as well. Is return customers would cost less to keep versus new customers.
Yeah. So what we're looking at is existing customers and new customers that we're getting. Those 2, the retained customers and the new clients, are the ones that make up your total customers. But there's figures that go behind those as well. Your existing customers, how many of those existing customers are you keeping year in, year out? And to get new customers, what do you need to do? Well, you need to get people to inquire. And then once they've got some interest in your business, then you need to convert them from just inquirers into being customers. And you should be keeping statistics, and so should the bank in this case, to know this. And it's different for each business. For example, for an accounting practice, our existing customers generally come back every year. Whereas for someone who might be selling cars, They may only be able to see your client once in 10 years, things of that nature. So the different styles of business require different ways of looking at that. So for an accounting situation, the new clients is not the bigger issue. Keeping the existing ones happy is the issue. Whereas for a car dealership, getting new clients in might be the big issue for them. So they're the type of figures that you need to know. Why do you need to know those? Because that's how you can predict what your cash flow is going to be, what you need to do, and your cyclic nature of your business. For example, the restaurant down the coast, if it knew those figures for January and then knew those figures for June, it could do its calculation for cash flow a lot more accurately than in any other way of doing it. Has anyone got any questions? Yeah.
How might you guesstimate those numbers at this kind of setup phase, or is that just not something you can accurately?
It is hard at guessing really at that point in time. But what you need to do is then set the target and measure it. Now, I had a lady I was talking to yesterday who I happened to run into and said, "Oh, I'm about to move premises." And I said, "Oh, why are you moving premises?" And she said, "Oh, because where we are, I'm not getting enough customers, so I'm going to move premises. I'm going to be bigger and brighter. I'm going to have more stock, and it's going to be in a better place." And I said, "Oh, is it costing you anything?" She said, "Oh, yeah, it's doubling the rent and it's all this." And I said, "Well, how do you know that you're actually going to do that? How do you know you're not going to go backwards? How do you know you're going to get any more customers? Do you know actually how many customers you have?" "No, I've got no idea." "Do you know how much money each customer spends?" "No, I don't really know that." So I went and we sat down and we worked it out. Some of our old records, we could actually calculate roughly the number of customers she was getting per year, how much they were spending and how many times they'd come back. We then could calculate how many new customers she needed to be able to afford that extra rent, the fit out, the extra stock that she was doing. Yep.
What happens if you don't have, like you're just starting up, you don't have an existing customer base, and your business is not really aimed to get anyone? It's like the business they're trying to start up is to sell online ticketing.
Yes.
Yes, and they might have a very small number of people who maybe opera buffs might buy regularly for the opera coming to town, but the large percentage of their base, I would imagine, would be people who once or twice a year go out to a special performance.
Yeah.
How do they then, who's their existing customer?
In that case, they wouldn't have existing customers. They will after a period of time, because there will be people who will be repeat customers. But in that situation, the existing customers, they may have sold 1,000 tickets last year. That's their starting existing base for them in the second year. But their retention rate might only be 2%.
But you can get statistics on tourists in the region and what they spend their money on and all this sort of stuff to do forecasting, and
You can
get a
do
general idea of what your
That's
new
right.
customer might spend or
Yes.
or who they might be.
Yeah, but you can get those information. They're still guessing whether they're going to use you or not.
But it gives you
a starting point. Yeah. In that case, your existing customers will be nil. The number of inquiries is what you've got to work out, and then you've got to have a look at the conversion rate of how you convert that.
I was just wondering if anyone might have advised them to sell their first business to help fund their new passion business, or is that not a good advice to use?
It could be. I'll talk about that in a little while, if that's okay. Do I know these figures from my business? Yes. I know how much the average people sell a bill. I know in categories, if they're business clients, if they're individuals, if they're self-managed super funds, I know the figures for those. So we had a person come in for business coaching, and they didn't know their figures. They had no idea. They were a shop. They had no idea. So one of the first things we made them do is to actually start looking at those figures. Well, how did they do it? Well, they were a shop that either got inquiries from people walking in the door or from on the phone. So all we did was give them a pad, line down the middle, one pad for the phone, one pad for the clients coming in through the door. And all the staff had to do, and it wasn't hard to train them, was, you have to point out the importance of it and what it means to them for them to do it. But all they did was, if the customer bought something, they put a tick on one side. If the customer didn't buy anything, they put a tick on the other side. So it gave them a total number of phone calls they were getting, how many of those were actually buying stuff when they rang, and how much weren't, and the same with the people walking in the door. What it showed was that they weren't very good at converting new leads into acquired customers. So we gave them sales training. And that way, the staff now are able to get those conversion rates up.